So I'm going to start it off and talk about a few things. I'm not the best prognosticator at all. For me, I'm more of the 2/3, 1/3 kind of person. That's how I like my trading systems to be. That's how I like my sports teams to perform, though they rarely do. UCLA Bruins, New York Jets. I'm speaking to you. But for me, trying to predict the market I'm probably worse than 50-50. You could probably have a coin that would be smarter than me when it comes to really making those big macro decisions. It's why I've always been such a believer in trading the way that I do and stacking the odds in my favor and being very technical and not really having to try to figure everything out. So what I thought I would do is I'd focus quickly on my forecast, where I actually have some control for NetPicks in 2012, and kind of talk about a few things there so you guys kind of know where we're heading. The first thing is we're going to be doing fewer third-party offers in 2012, and you may be wondering what the heck is a third-party offer. And that's kind of when you get an email from us that maybe says, turn $10 into 10 million. Is that more than 10 million? That is a bizarre number that I'm missing a zero, but whatever that is, it's a lot of money in 10 seconds a day with the easy button trader. So to explain something about the way this business works, I want for all of you to understand is advertising in this field is kind of ridiculous because, as you know, brokers, I should say, they're really the ones that make the gobs of money. So they pretty much have this endless advertising budget, and they'll spend whatever money. So we compete in the advertising world against brokers who just seem to have an insatiable desire to spend anything to get an account. So what we end up having to do a lot, and over the years, is kind of work with some of our friendly competitors, and we do some cross promotions. And there's a place for that, because if you're like me, I've always been looking at other products, services, strategies. I mean, none of us as traders are trading 100%. So there's always room for improvement. There's always things that we can learn about. Somebody else might have a system trading a specific market that I've never even considered before. It could be a good education. So we have always found there's definitely some complementary things. Unfortunately, what ends up happening is it's difficult for us to always know, is the product really going to live up to the promise? And I think earlier in 2011 in particular, there were some instances where we had some knowledge of a company or even the people behind the company, and we were like, they don't really even trade. And that's a huge pet peeve for me. I just don't think you should be putting out products if you don't really trade. So we made a decision in the middle of 2011 to start to phase out as much as we could the third-party offers. And you guys probably have seen that. I think over the last 4 months, I don't think we've done a single one that hasn't been something from NetPicks and developed by NetPicks. There's been nothing. And right now on the calendar, we don't have anything scheduled that you're going to hear from us promoting another third-party offer. I won't say there'll be nothing in 2012. If we find something really complimentary that we think can help you, maybe we'll get a great deal from TradeStation or one of those brokers or something that really makes sense, you will hear from us. But we're really going to try to scale those back, let's say 90% or more from what you've experienced in the past. What that does mean is we're going to raise up or increase our product cycle in 2012 for partly that reason. In 2010, the only main product that we released was the SST. And in 2011, the only main product we released was the Keltner Bells. I mean, we did different things where we upgraded the SST. We added some new features. Sometimes we'll do some training or mentoring. We build things around the core products, but that really over the last 2 years has been the product releases. And we're going to see that increase a little bit in 2012, but what we're going to do a little differently is we're going to see a bit more of a niche approach, whereas the SST is the big, dynamic, powerful system. The Keltner Bells tries to be very dynamic, at least in Forex. We felt that we want to get a bit more focusing on specific niche type products. I mean, there's not a lot that we can think of that's going to replace, the SST and what that's doing, but we do feel there's opportunity in very specific areas that's going to appeal to some of you. It probably won't be products that appeal to all of you, like a scalp trading product. For some of you are like, heck no, I have no interest in that. That sounds like a lot of work, and I got to be there all the time. I'm a swing trader. But that's the whole idea. We want to have more of a niche approach. A pay for performance and profits only product, you only pay if it's profitable, you don't if it's not. A sector-based product, maybe something that's only focused on ETFs. It lives and breathes ETFs, or it lives and breathes the metals like gold and silver that Brian's going to talk about. And that's the whole focus of the entire product. Copy trading, which has to do obviously with it's the approach of the robot, but with human intervention, but actually having the ability to have your account copy what's happening in a master account. Product upgrades, enhancements, improvements. We're definitely going to keep focusing on that because we don't have a trade system that trades 100%. There's always room for improvement. You know that everything we always look at is always evolving. And we've got some other really cool things that we're looking forward to getting out there. So you'll hear from us on a regular basis, probably no more than you have ever before, but it's going to be much more specific to NetPicks and sort of the sphere of NetPicks rather than NetPicks interlaced with a whole bunch of other third-party stuff, which I'm sure your email box is already crammed with at this point. For me, a personal focus on the year is going to be what I think is a huge dilemma, and that's a lot of people are seeing success on their chart. They're not seeing success in their live account. So I kind of call it the paper profits looks good, but then for some reason you're having trouble converting what's happening on your chart to your live account. And this really is my focus this year, to figure out just what the heck is causing that problem for a lot of you. Because if you can get it right on paper and on the chart, in theory, right, we should be able to get it right in the account, and it just has not always translating for everybody. We talk to a lot of people, and a lot of people doing very well. And then we talk to people who are like, I just don't get it. I mean, things seem right. I know what I'm doing, but I'm not getting my account as profitable as it should be or profitable at all. Something is breaking down, whether it's mistakes, speed issues, the strategies are too complicated, it's a psychological barrier, you're overanalyzing everything, or maybe there's too much going on at once, you're over trading, maybe lack of automation, or there's too much analysis that has to happen at the point of trade. Whatever the case may be, we've got to find solutions for this in 2012, because it doesn't help any of us to have a great system if it's not being reflected right in the trade account. I mean, that's always going to be pivotal overall. Now I'm going to end it with a few of my, what I'll call my cracked crystal ball predictions, because I'll probably be no better than 50-50 on any of this. So I'm going to play it a bit safe, but I'm going to say number one, I really do think that swing trading is going to continue to grow. We have seen this over the last couple of years. I think buy and hold is a waste of time. It doesn't work. It hasn't worked for a decade. So I think we know that part's broken. Rapid day trading is very viable, but it is a lot of work. It's always going to be a fair amount of work unless we can look at automation or copy trading or things that can make day trading easier. But unfortunately, even copy trading and everything else in day trading is very risky because of slippage, latency, speed issues. It's still going to come back to probably more of a swing trade type approach. Forex trading, I think, is going to continue to grow like crazy, but more so outside the U.S. If you're in the U.S., you kind of understand what I'm saying here. The regulators have really done some things to try to protect us, unfortunately probably overstepped, and what it's meant is a lot of U.S. brokers are doing awful. TradeStation recently swooped up interbank FX for like next to nothing because the decline of accounts at U.S. Forex brokers is amazing. What's been happening. The exact reverse is happening internationally. Most international traders have pulled out all their accounts out of the U.S. because we have ridiculous regulations. The terms just aren't good. It's so much more competitive to have your account somewhere else, and the protection you got in the U.S., it kind of doesn't overwhelm all the advantages trading elsewhere. Unfortunately, U.S. traders, we're not allowed typically now to open accounts internationally because the regulators here have pretty much made it clear to a number of countries that if they do, they're opening up themselves to a lot of problems. But I think this is going to crack some point this year. I really do feel that the regulations are going to be changed. It's going to make it more competitive for U.S. brokers again, or they're going to allow us to go back to the international markets. Otherwise, I think we're going to see this continue to grow globally, and U.S. traders are going to be at a disadvantage. I do think, and this is a positive, Forex brokers here in the U.S., which I think is neat, now have to tell you what percentage of their accounts were profitable each quarter. Now, profitable could be a penny. It probably even means unchanged if the account's dormant. I don't know exactly how the calculations are done. But the good news is there's been steady, if small, improvement quarter to quarter. And in Q4, the top two brokers saw about 39% of their accounts were profitable. Granted, 61% were not, but that's no surprise. I actually think this is going to continue to improve throughout the end of 2012. I think there's just better systems out there, better training. I think people are getting to realize Forex is not the lottery. It's not get rich quick. and I think that's going to help improve things. I also think a lot of U.S. traders are going to migrate towards Forex futures instead of the straight spot currency for the reasons we mentioned. My last two quick things, I expect crude oil futures to hit 150 or higher. I'm curious to see what Ron's going to say about that later. And I actually am more of an optimist. I think this U.S. stock market is going to be up 10% or more on the year. So with that said, TJ, I'm going to hand it off to you, and you're next.